Hello and welcome to this new edition of Bourdier's Monday Report. The American economy is doing better than expected. At least that's the message conveyed by the statistics published last week. Indeed, the Purchasing Managers' Index rose more than expected in May, both in the manufacturing sector and in services, as you can see on the graph to the left. The level reached is well above the 50 threshold that marks the territory of expansion and is consistent with rather robust activity growth over the coming months. Moreover, this positive message about the economic situation is reinforced by the job creation figures in the American economy for the month of May. They exceeded expectations and the figures for previous months were also revised upwards. This allows the average calculated over the last 3 months to rise to its highest level in more than 2 years. This is reassuring regarding the health of American consumers, who have become the weak link in the economy as they are affected by rising energy costs and interest rates. Nevertheless, the continuation of the economic cycle will obviously still depend greatly on developments in Iran, which, as we saw again with this weekend's tensions, remains a major source of uncertainty. In terms of market asset performance, the combination of these strong economic figures and a prolonged closure of the Strait of Hormuz has pushed sovereign interest rates up by more than 10 basis points. As a result, bond prices have lost nearly 1%, both in US dollars and in euros. With the dollar index rising by more than 1%, the increase in interest rates has severely impacted gold, which has dropped by more than 5%. Stocks were not spared either, particularly the semiconductor sector, which lost 5% over the week, dragging down both US and emerging market equities, with US indices down 2.6% and emerging markets down 1.9%. Europe, where tech is less represented in the indices, lost only 0.5%. This week, the statistics to watch closely will be the producer and consumer price indices in the United States and China. We will also have the release of US consumer confidence as measured by the University of Michigan. Most importantly, there will be the meeting of the European Central Bank, which is facing a significant dilemma. On the one hand, inflation is above its target and in itself justifies an increase in key interest rates. On the other hand, this inflation comes from an external shock due to rising energy prices, and it is occurring at a time when economic activity is weaker than initially expected. Indeed, GDP growth of plus 0.1% in the first quarter has turned into a contraction of 0.2%. The risk of a monetary policy error is therefore clearly high in the Eurozone. Finally, we are maintaining our buy position on the Spanish company Inditex. As demonstrated by the publication of first quarter results, which ended from an accounting perspective at the end of April, the company maintains strong business momentum, improves its gross margin, and is benefiting from a good start to the second quarter. The stock is performing in line with the rest of the European market and is doing much better than its sector, which proves that there are attractive alternatives to artificial intelligence, including in the consumer sector. That's all for today. Thank you for your attention, and I wish you a wonderful week.